All right, markets closed. Let's take a little look. The markets were red today. So yesterday we saw the markets green, but looking a little toppy, something I've thought of the last 2, even 3 days. It went a little higher than I expected, but now it's starting to look nice and bearish. The close today makes the last 4 days seem a little irrelevant, and actually it looks like the drop that's coming should take us quite a few percentage points lower. So let's do this live. I think the next point, the next support in this case would be down here. So obviously we've got sort of the wick between these two candles and also this ascending line, which I just drew. 15-minute chart is probably better. Bit of a gap fill, I guess. So yeah, let's take us to about 384. Maybe just grind a little sideways for 1 or 2 days and then back lower into the low 370s. Let's see what the chart looks like in 1 or 2 days. But I think we go to 384-ish. Let's see how much of a drop that is. If it can be achieved in 1 day, 2.5%. I need to check what news is coming tomorrow, but that's probably doable in 2 days. So yeah, markets look a bit toppy and now they look ready for a bit of a drop down to here. The Nasdaq, this trend line doesn't look as credible. But yeah, I think the equivalent would be a drop at low 270s actually. And the Nasdaq's been pretty weak and pretty weak on the way up, pretty weak on the way down, I would say. It was down 1.4%. Okay, that's way too much for 1 day, maybe 2 days. So, but still, you look at the general pattern on the daily, they look heavy. They look heavy. So the next target would be roughly there. Right, let's look at the Dow Jones, which has been pretty strong. I mean, look at that today. It was hardly down. It was basically unchanged, but still, look at those last 4 or 5 candles. Okay, the big green one was a nice breakout-ish. Yeah, it was, it took out this area, went to the second resistance. But I like how this second resistance I identified really did put a lid on it. You'd expect it to keep going after the amount it's moved, but I'm pretty happy about that resistance being well identified. So one thing that differs on the Dow Jones is this trend line here on the daily, very tight. The other ones, you can see there's no equivalent here because there's sort of no candle in the middle for the base to touch. But this one, we're far from touching the ascending. The SPY, we're not far, but still we're maybe 1.5 days, if I can say that, away from touching that. The Dow Jones, we're there. So we're more likely to drop that, and you can see it really did its best to hold within it, and it did. If we go lower, then I would assume a little drop to 33,000, but that's too close because I think the other markets are going to come down quite a lot, maybe 1-2%. And I think the Dow's going to have to, that's too much. Maybe maybe it will stay strong relative to the others, even on the downside 1 more day. So maybe we do go to 33,000. But after that, after that, I guess it will go down to 32,000. Maybe 32,000 from there. How much of a drop is that? 2-3%. Yeah, you know what? It's way too heavy. I'd say there's the next one. And then we'll see after that, probably 30,000. Big smash. Everyone's just going to be running out the door at the same time. Russell 2000 also stayed within this down descending trend line, the long, strategic, more credible one. Next stop, basically gap fill, also coinciding with the ascending line. I'd say there. Need to zoom in for it to look a bit more applicable. So yeah, down to here, let's say 178. I think that's pretty much doable. 2.5%. Yeah, let's have a big down day. Otherwise, it takes the next day. What are we with Thursday tomorrow? Yeah, so end of week we'll probably settle around this ascending line, and then next week we flush it, and then back down to the lows we go. Think about it. If we come down back here by Friday, everyone's going to be thinking, "Oh my God, we're going to go back down here," and then we look awful. And that should happen. And also fundamentally, all of this is about how much the rates will go up. And we've had the PPI, we've had the CPI. everyone thinks inflation is coming lower, and now we start to see all these banks come out and say 50 basis points is expected. That's something I've thought of. I actually thought the last Fed meeting could lead to 50, but obviously it was 75. But I think the next one really will be 50. The thing is, Wall Street is pricing in, therefore the yields, the dollar, the markets, everyone you could say has already priced in 50 basis points. So maybe when they announce, if they announce obviously 50 basis points on the next Fed meeting, maybe the markets won't go up. People think, oh, 50 basis points, that's good, right? We've had 75 nonstop, 50 is good. No, because first of all, it's rates going up. That's horrible for the market. It can't even take where we're at now. And on top of that, we've already priced that in. Sell the fact, right? Buy the rumor. That's what this big jump up is, probably, maybe. Sell the fact. Back down we go. So I actually think we have reason to go down technically and fundamentally, leading to the next Fed rate hike. So yeah, VIX didn't do much, but wasn't that red. I mean, it was too red. Sorry, it should have been green today. That's a bit weird. The VIX is acting strange, and you could even say it's a bit broken at the moment. So it should be above 26 or nearing 26. I think if tomorrow we get the sort of flush that I'm indicating in these markets, VIX should really be touching and maybe even closing near 26, in my opinion. It should already be there, probably. Yeah, definitely. So if the market crashes tomorrow, mini crashes and VIX isn't at 26, something's wrong there. Don't trade that. And don't even consider it as a decent indicator. So let's look at the yields. Yields were flattish. No, wait, what did I read today? The yields, the twos and the 10 is extremely inverted. I think there's a new record inversion between the twos and tens. Let's just look at the 1-1 sideways, green, but not by much. Two, same thing. 5-year red. You know, we're nearing that sort of support zone that I looked at and indicated before. Let's call it 3.8-ish. You can see what that is. We're basically touching it, right? If I move it to the left, we're within the radius. The 10-year, you can see, I think it's going to go a bit lower. That makes sense. I still agree with that. 3.6, just 3.57, 3.6. So maybe another lower move, but we're basically there. The 30, and now you can see how useful this ascending line is. When you break it, you really do break it. You know, everyone's respected that. The 30-year is basically gone below. So you could say that the top of this part, the bottom of that part is the entire range that I've chosen there. Next stop, probably 3 points, maybe this area, 3 point high sixes. Although we're at a level right now, don't forget, you know, we're literally there. So if it bounces from here, the chart will look very respected. But still, you know, you look, zoom out, look at this more longer term and therefore more credible. It hits more zones going further out. So next, very strong, and it was recent high, 3.4 on the 30-year. But yeah, the difference between the twos and the tens, and that's the one that everyone looks at for sort of recession yield inversion, is at a record, which means the 2-year yield is way higher than the 10-year. And remember, it's supposed to go the other way around. It's supposed to be sort of the yield curve is supposed to go up the further out you go. And here it's really really the opposite. So recession, and that might, and remember, the market went down today, right? The market went down 1%, let's say on average, whilst the yields were sort of flat to even negative. So what happens when yields bounce, let's say with a Fed 50 basis point, and then let's say the dollar goes up? Now you've really got an acceleration on the downside. So for me, I remain bearish on the markets, bullish on yields. Bullish on yields. They could come a little lower, but ultimately bullish. So let's move to the dollar. And you can see this 95. I noticed it. Sorry, 105 yesterday that I indicated as a strong because of this wick, nice hammer. Again today we went down, eventually into the 105s, came back up, closed above 105. I think we're basically finding strong support at 105, and it wouldn't surprise me. And I think what will happen is that we basically go back up 109, test back this range up here. that'll coincide with yields going up and markets going down. If we go lower, then 104. Let's see. I just feel like 105 will kind of hold. We could have a sort of fake breakdown and then rally back up. I just feel like we'll stay at or above 105 at least. But then next support, obviously, let's say we break this, then I just want to see what this trend line is. Okay, it's this breakout here of 103-ish. Then by the time we break it, we'll probably be here, 102, 103. Okay, I'm going to say the next, because you've got to take the time component into it too. Let's say we do break 105, well, how many days later is it? We'll probably be here. So then the price at which it hits this ascending is higher the later it is. So I would say, if I could make this a bit bigger, I would. But basically between 102 and 103 is the next support. And that'll be very strong support. If we lose 105 and 103, basically this entire area here is a pretty strong buy. But already you can see it's having support in the 105 range. So, and if there's a crash, if the markets go down, dollar will be strong. So that trend doesn't change for me. So just to recap, markets down, yields sideways up, dollars sideways up. Let's look at commodities now. Commodities kind of acted like the market ready to come down, but they weren't as weak as I thought they would be. Now, I wasn't sure whether we'd go for 1800. It looked also possible today when we sort of went into the 1780s. I thought, okay, maybe we're going to do it. And silver was strong today. Actually, silver was pretty strong at some point today, up almost 2%. And then look how it closed. Obviously, we've reset, so ignore these numbers, but we closed, red. We closed red, not by much, but after being up 2%. Now it looks heavy. It's funny what a couple of hours can do. Let's just look at the 15-minute. I mean, look at this, up, down. If you zoom out, you can see it here, even on the 15-minute chart. It's just sort of, it broke trend there. It didn't reach as high. If we just sort of lose 21, let's say 21.20, let's say 21.20 just for good measure, bam, down we go here, bounce a little bit, and then lower. We need to find support a little lower. And then where do we find support? Well, I haven't checked. Let's see real quick. Very strong support around here. So already there. I would say 20 is a nice number. It'll take a couple of days. Definitely in the 19s. By then it'll probably be mid-19s. Mid-19s to 20, very strong. But we might not even get there. It depends on several factors. But now it looks bearish. So I remain bearish on silver and gold. That's what I've said for 1 or 2 days. I've been trimming my positions because of that. It looks more obvious after it goes down a little bit, but you've got to anticipate what the candle will look like. After it's done the move, you think that's going to happen. So it's easy to say, yeah, now it looks bearish. You've got to call that when you're up here, which is harder to do, of course. Gold doesn't look as bearish, but if the dollar goes up, and to be honest, if the markets go down, both coincide, that'll bring gold down. And we're overextended. Look at the crazy move we've done. A lot of people saying, look, the bottom is in. Don't try and trade it. Don't try and be cute. I agree, but I disagree. I don't try and trade the whole thing. I keep my long-term positions in case I'm wrong and it just goes all the way up, which is so unlikely. But, I have this long-term thesis for the next couple of years that the precious metals will do amazingly. That's why I refuse to sell all of them. But I will try and be cute and sell a little bit here, buy a little bit there, because look at this tradable stuff. You can just like double your money. You could have more money, more value in your portfolio here than you did here if you trade it well. And then how much do you have and how much can you make? By the time you get back up here, you can double your money. Easy. So I will try and trade it. I'll get some of it wrong, but I get most of it right. And I make more money by the time I get back to where I was contemplating trading or not. So investing, holding, Warren Buffett style, I don't actually recommend in this type of market, especially. So where do I think it's going to go? We're going to go back down to this area, 1730 on gold, right? This was the breakout zone. And we usually overshoot and undershoot. So actually we'll probably dip below and maybe test low 1700s. but I don't think we'll take it out. If we do, next zone is 16, let's say 80-ish. And then if we break that, then it'll be all sort of all-time lows and, but that's just not going to happen, to be honest. If it does, I'd love it. But yeah, so 1720 and then 1680. And then, to be honest, it's time to rethink a little bit. But otherwise, all-time lows 16, let's say 30. Those are three zones for gold. We're not going to get that low silver. I've already sort of thought about it. I think 20.5. Then I think 20. Then I think 19.5. Just simple 50-cent increments by the time we get down here. But I think we could get down there. I mean, how far of a drop is this? And we've seen silver do these drops, pretty vicious drops, like down 3.5%. I can imagine that. So yeah, I'm looking for a move lower in the metals. Let's look at the GDX, GDXJ, total copy of silver in this case. Very bearish. Look at that, close at low of day, worst type of candle. The gap is ready to be filled, and the markets haven't even started to drop, neither of gold and silver. So this is really looking for any excuse to go down. Look at that, just 2% to fill the gap. So we'll do that tomorrow. I think even if the markets are green, that's almost guaranteed. But where's the real? I mean, it's not going to go there and go back up, to be honest. You need to have really some market changing news for that. I think we will go back down to 26. Basically, this breakout line that I was looking at before, plus it's a nice round number. If we go lower than that, probably 25, keep it simple, plus it all coincide with this descending line, which is credible to me. I mean, look at this bar here breaking out of it, and it's hit 3 times, and yeah, that's all you need. So yeah, first, and I should really move these targets actually for the way down now, but essentially it's the same thing. So this one here, actually I can just keep them all in. They work on the way up and on the way down. I haven't really added these targets for all the charts I've been looking at. I should remember to do that. GDXJ, same thing. So let's say, to be honest, I'm not even going to do the gap fill. We're not going to go all the way up. So let's just say over here, 32.5. Next move down, 30. I just don't think we'll get that low. Let's say 30. I don't think that'll happen. For some reason, I just feel like it will stay at 30.5. That will do. I don't see it going lower than that, but otherwise it'd be gap fill and back to this ascending support. Let's say something like this, actually 31, to be honest, more than 30. That's a tough one if we lose. Not so sure. Whatever, call it a large range there. On the way up, doesn't matter. I'll just leave it. There must have been a good reason. So that's it, really. Let's finish with crypto. That is interesting. I'm dying to get my position very big in crypto. Now, what did I say? I said that we're going to eventually, sorry for moving the chart too much, this ascending support will eventually touch it, bounce a tiny bit, flush it. I think we're going to see some big institutions slash exchange go down. I think it was a bit of a Lehman moment, this FTX, and it takes a bit of a delay and then some sort of other domino drops. And we need, we need Tether, we need Sailor, we need these guys just liquidated. And that will be a bottom. That will be the bottom, I think. Just some massive V flush capitulation. The most hardcore people who loves Bitcoin, you want them to just say fuck this, and then that's the bottom. So I'll just end it there. I was going to look at some individual stocks, but to be honest, I'll end it there. So let's speak tomorrow.